What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today's video I'm super excited to bring to you because I have the absolute best scalping strategy that I've ever used. And I'm going to show you how to use it. Guys, it only takes 3 indicators and some patience. That's it. Stay tuned. I'm going to tell you all about it. Alright guys, a couple things to go over before I get right into the charts. First, I'm not a financial advisor. This is not financial advice. Second, if you like this content, please think about subscribing to the channel, hit the like button, and throw me a comment. Tell me what you think. And third, this particular strategy is not my own. I did not create this strategy. This comes from a gentleman named Artie, and his channel is linked in the description. It is The Moving Average. Dude is a phenomenal trader. Absolutely phenomenal. I suggest taking a look into his content because he has great content and great information. I want to get those things out of the way first and give credit where it's due. So we're going to hop into the Bitcoin chart because it's one of the easiest ones to see. Naked chart here, absolutely naked. 3 indicators is all we need. And I'm going to go over each indicator and how they work and what they do. This first one's going to be the smooth moving average. And you're going to use the 3 smooth moving average so you get all 3 lines for one indicator. Now what we're going to do is we're going to adjust this slightly. So I don't like the blue for the moving average, so I colored change a little bit. I make the color 100% opacity and make the lines just a little bit thicker so they're a little bit easier to see. And the inputs, this is the actually important thing. 21 day, 50, I should say period, not day, and 200. 21, 50, 200. We're on a 15-minute time frame here. This scalping works for 1 minute, 5 minute, 15 minute, whatever. I think if you get higher than that, you're not really scalping anymore. So keep it 15 minute to the max, or keep 15 minute as the max. Next, we're going to go to our second indicator, which is RSI. So the RSI, but we're going to change this up a good bit. It's going to be different than how we've ever used RSI before. So keep the input at 14. The style, this is kind of irrelevant, but I change the color. The upper band goes to a solid line and goes to 50, and the lower band goes to a solid line and also goes to 50. Now what you end up with is just a straight line down the center of your RSI. These are 2 of the 3 confirmations to even enter a trade. There are 3 confirmations to enter a trade with this strategy. First, you have to have a known trend, uptrend, downtrend, whatever. The 21 day crossed under the 200, followed by the 50 day crossing under the 200. Your trend is developed here. You're in an obvious downtrend. Your RSI for a short needs to be below 50 to enter a short. If it is above 50, you do not enter a short position. If it is below 50, you do not enter a long position. That's a hard rule for the indicator. It has to be in a strong trend. Here, this area here, this chapo, no go, no go. Sideways, you do not want to go sideways. If you wake up or you get into a trading session and you see something like this, that's a no trade zone. Get up out of your chair, don't even think about it, or find a different asset, whatever the case might be. But you cannot use this method with a sideways, even though the 21 is moving, you know, up, but then back down. So turn up, turn sideways, turn up, came down, yeah, came down again. You don't know. You can't use this with a choppy sideways trade action. There can't be indecision and consolidation in the market. It had to be in a known trend. Now, the third indicator is called Williams Fractals. This indicator is interesting. And the only thing I change is I change it to be the below bar to be green and the above bar to be red. I like my sell indicator to be red because I think red is sell. And I like my buy indicator to be green because I think green buy. Now here's the thing. This is now a known downtrend. So greens are kind of irrelevant here unless the trend starts to move, unless you start to get a hook on these moving average lines. So here, this is the absolute best time to get in. This This triangle here is just when the 50-day also crossed below the 200-day, just like the 21 already had. 21 already had. But, you know, the 21 can kind of go down and come right back up. It happens. It can do that. Actually, it did it here. You know, it came above, went sideways, came above, went back to it, went way above. So the 21 is not the strongest indicator. It's short term. The 50 coming under, that was huge. In order to make one of these triangles, you have to have a perceived peak. This is going to say that this was the peak. This candle coming down created this triangle. This candle coming down created the triangle here. This candle confirmed it, because if this were to buy up really strong green and make it like a bullish engulfing here, this would go away, this would disappear. So you can't make the trade as soon as this is created. You have to have two candles of confirmation. So this is the candle that's created on, but it goes back one candle to make the peak. And then this confirms it, whether or not it stays here or if it disappears. So this is where you would take your short position. You would take your short position after this candle. And your stop loss is going to be the top of the wick of the candle with the triangle on it. So we're looking right there, stop loss at 0.84%. I trade on 10x, so that's an 8.4% loss for me on stop loss. I want to do a 2-to-1 risk reward ratio. So we're going to go 2.0. Now that happens, we buy in here, sell, sell, buys back up, sell, sell, sell. Now see this green here, it thought it was a bottom, but it's in a downtrend. So this bottom is going to be, this is a low, but it's going to make a lower low. It's going to make a lower low. So these greens on the known downtrend aren't really anything to worry about. Don't think it's going to flip every time you see one of these greens. It just means a low was created because this next candle turned green. This next candle came up. But you see it came right back through there. It only took, you buy here 1, 2, 3, 4, 5, 6, 7, 7 candles. Yeah, so 1 hour, 45 minutes at a 2-to-1 ratio trade, 1.68% profit. So again, on 10x leverage, it's 16.8%. And you're in and out. That's it. That's a 2-to-1 ratio trade on a scalp. 1 hour, 45 minutes, 16.8% profit. Gone. See ya. On to the next one. Now, again, here, you could also get out of that and you come up and you see this start. You see this one create because it came really close to hitting the 21-day moving average. So let's say you want to get right back in. You saw this come up and hit close to the 21, sold back down. There was some selling pressure here. And then this second candle confirms. So you get in right here. Again, your stop loss is here. You're looking at a 2-to-1 ratio. And that one hits 2 hours. 2 hours again. And that is a 2.6% profit. So a 26% profit on margin. And you're out. So in a period of time of, call this 6 hours of the day, and you made 26 plus 16, 42% profit in 2 trades, and you're out, gone in a couple hours. That's your day. Remember, stay away from this. You don't want sideways. Now coming back up, there's some uptrend here. You see this, there was an uptrend. You could have bought this here and you could have made your 2-to-1 profit ratio. Absolutely. But you did not have both confirmations at the time that this was created. We weren't above 50, but by the time it confirmed, we were above 50%, or above 50 on the RSI. However, the 7 hadn't crossed above the 50 yet, or the 21 hadn't crossed above the 50, and neither of them are above the 200. And here, this is sideways. This is completely sideways on the 200. Look at that. So this here, we do not get into this at all to go long on Bitcoin until the 21 and the 50 both cross above the 200. Means there has to be a large move. There has to be a large move with strength to make these moving averages cross up to go long. Matic was pretty close, but again, Matic has started to go sideways too. You don't want to risk this. This is like playing Texas Hold'em, knowing that you're only going to play with pocket aces. Don't play without pocket aces. Don't play. You can't get blinded out. You can't get anteed out. You cannot lose if you don't play. Remember that. So don't take a chance. Don't trade this garbage here on scalping. Don't trade this. You're not going to get a 2-to-1 here. You're not going to happen. But you know, something like Link, you could have the same measured move. Now here is interesting because the 50 was already under the 200. Now the 7 crossed under. 7 crossed, or I keep saying the 7. The 21 crossed under with the 50 already under, and you're in a strong downtrend. So you have this candle is the peak. Confirmation, confirmation. Now you can see this already thought there was a bottom. So it created a green here. So this would have been the one you would have made, because that's actually when the 21 crossed under the 50 as well. So here that actually forced confirmation of all 3 moving averages down below, the 21 being the lowest, 50 and 200. This would have been the candle that you bought or you sold the short position. Your stop loss is right there. Then you go 2-to-1, and 2-to-1 you were in for 2 hours. And you're in a 2-hour trade, and each one of these peaks you can see was a lower low than the previous. It got back to the 21 and then dumped again. So again, you could have gotten out here, closed your position, gotten this. I mean, this was downtrend, downtrend, red triangle peak, evening star pattern. Get in here on this candle. This is your short position. This is your stop loss on that peak. And you get a 2-to-1 ratio again. And 1, 2, 3, 4, 5th candle, an hour and 15 minutes, you're out, you're in profit. And that is 2.6%, 26% profit again. So guys, this strategy is extremely effective, but it requires patience, it requires diligence, it requires you playing it correctly. You have to be in a downtrend. You have to see the trend, or you have to be in an uptrend. This sideways doesn't work. This whole area from here across, once this trend turned and started going sideways, we don't have a known trend anymore. This could break up, this could break down, this could do whatever. You can see the choppiness up and down in it. You can't trade that with this strategy. Sorry. This is what there is. That's just all there is to it. But if you can find a strong trend in any direction on Bitcoin, typically there will be something else doing it at the same time, and you can get into 2, 3, 4 positions at the same time and get in and out relatively close to the same time and make a day in one sitting. Make your day and get out. So with that being said, guys, that's the video. I hope you enjoyed. I hope you found it informational. And again, if you like this content, please think about hitting the like button, subscribe to the channel, all that good stuff. And as always, until next time, peace.